Is inflation going to be quicker than the market expect or still slower at this point?
One of our themes this year has been inflation making a comeback. And we felt for some time that the market was underpricing what the Fed was likely to do this year. And essentially, the Fed is likely to do what it's told us it's going to do, which is at least 3 rate hikes and possibly even 4. And in the last few weeks, you've started to see the market adjust to that as we've seen stronger data come through, as we've seen the tax reform package, and we've seen some signs that inflation is picking up. And that's been one of the potential triggers for the recent volatility. But I think it's very important to emphasize that what's happening is inflation is moving back towards the central bank's target. I think the Fed will be quietly pleased to be seeing inflation moving back towards that target. Our view is that we'll see inflation move to just above 2%. Over the next year. So yes, inflation is making a comeback, but no, we don't see that disrupting the markets.
Right, Richard, are you worried that the U.S. economy is overheating?
Not at this stage. We see the economy somewhere close to the middle of its cycle, somewhere close to full capacity. That typically that leaves significant runway for the economy to continue to expand before you get into the overheating phase. One of the things we'll have to watch closely is the impact that the tax cuts do have on the economy. We think they're going to boost growth by less than 1% of GDP. If that were to accelerate, that would bring forward the end of the cycle, bring forward that overheating phase. But our view is that end of the cycle is still at least 2 years away.
Richard, I want to bring up the dots. Okay, we have Chairman Powell yesterday with the obligatory photographs of he and the members of the Fed greeting each other. The dots are real simple, and what's so important here, after I've prettified them from 1.5% out to 3%, 48 months out, is we assume, Richard, a nice, smooth, bankerly path along the way. That confidence was destroyed yesterday. How do these various banks begin to adapt to a VIX at 30?
So I think what the Fed's going to be focusing on is the economic data more than anything else. And what we're seeing in that data is a very broad-based recovery, not just in the US, but outside the US. And what we're also seeing, as I mentioned earlier, is signs that inflation is returning back towards the central bank's target. So some of those fears of deflation, which have haunted the markets for some time, are starting to disappear. And I think the Fed will be comfortable with gradually raising interest rates in that environment. Yeah. And I think they won't overreact to a short-term rise in the VIX. What they'll be looking for is any evidence that that market volatility is spilling over into the real economy. And as I said, at the moment, we see no evidence of that whatsoever.